the number one cause of fires is electrical, and then the next after that is like the dryer vent. Like you didn't clean out the lint from the dryer vent.
John Fedro, and if you're watching this video, then you want to learn more about mobile home insurance. Now, I'm sure you have some understanding of insurance with regards to real property, with regards to vehicles. We're going to dive deep into mobile home insurance, and we're going to talk about a lot of topics, all pertaining to mobile home insurance. And I find that if they're confused about something, if they're scared about something, it's typically because they don't know. They don't know the verbiage or the terminology involved. They're afraid of being caught off guard. They're afraid of not looking like an authority or not looking like somebody that knows what they're talking about, which is something that we want to be. Whether you're a homeowner, whether you're an investor, we want to know what we're talking about, or we should. Having more clarity is better than having less clarity, and I hope that this video, gives you a much better understanding about mobile home insurance and insurance in general, as well as your options, as well as provokes you to ask more questions. You know, this video is not an entire encyclopedia about insurance, but I hope that it does cause you to ask more questions. Questions to me, questions to other people locally that you know, questions to your insurance agents or brokers. Let's talk about what this video is going to talk about, because it's going to be a pretty lengthy video, and if you want to sort of jump to a certain topic, you can do that. First, we're going to talk about the intro, which is kind of what we already did. Then we're going to talk about vocab, important vocabulary. There's a lot more vocab and frequently asked questions if you go to mobilehomeinvesting.net/insurance. But right here, we're going to talk about sort of a quick vocab. I'm going to try to keep it short, but really impactful. We're going to talk about Dan's insurance lesson. Dan's an investor that was out of the state, and 2 homes got very badly damaged. We're going to talk about that and what Dan did to overcome that. We're also going to talk about investor options. If you're a real estate investor, if you're a mobile home investor, what are your options? Because you have some. Whether you act on those or you don't act on them, you're kind of making a decision either way. So having more info is better than less. We're going to talk about investor options right here. Homeowner options. If you're a homeowner watching this video, thank you for watching. Please feel free to watch the whole thing. But if you want to jump to sort of your section, you can jump to this time code right here. Then we're going to talk about Erich's story, about what happened to his property. He got a roof ripped off of his home and it slammed into the neighbors. So we're going to talk about that, what sort of implications and what he had to do, or what he decided to do. Then we have a special bonus for you, some cool things I learned. I thought they were really cool. I wasn't able to sort of fit in anywhere else, so I want to sort of just put those at the end for you to learn. Let's go ahead and jump into this. Now, the definitions and terms behind me, we're going to go over really quickly. I'm going to try to add as much content as I can in a short period of time. But these words pertain to different stories and different options that you're going to hear later. So I want you to have a decent foundation so that later on you can say, okay, I understand what that means. I understand, you know, the if-then scenarios and why we would choose to do what we're going to do. There's more definitions and terminology at this website, or this page down below. But let's go ahead and jump into what these definitions mean pretty quickly. Homeowners, pretty simple. If you're a homeowner actually living in your property, you want homeowners insurance. Now, homeowners insurance is divided into a few different sections with regards to what you're protected against as a homeowner. Now, you're the one on the title, you're the one on the deed of the mobile home, or if your state doesn't have titles, then it would be just that you are the controller, you are the owner of the mobile home. And you can prove that within your state. Again, some states use different forms, but if you are the owner and you are living in the home, you're protected against the property and dwelling. So if the property burns down or there's damage to the property, you are probably covered, depending on your insurance policy, for the property and dwelling. Now, that's going to be covered to the amount that the home is either, that there's a loan on the property for, or what the property is worth from the local property appraiser, from a local appraiser, what the insurance company has that the home is worth, that it would take to rebuild that property. So if your home is worth $100,000, you're not going to get $1 million policy on your property and dwelling. You might get 120, 130,000, but the insurance company's not going to overinsure the property to some crazy extent. You can underinsure the property if there's no bank loan on it, but property and dwelling is covered. Liability is covered as well. If somebody falls and hurts themselves, that's covered under bodily liability, and then there's property liability as well. So bodily liability, if there's a dog bite, someone hurts themselves due to negligence or even non-negligence, and then property, damage. If something happens, like in Erich's situation, the roof blew off of his home, damaged the neighbor's home. If that neighbor sued Erich, well, that property liability insurance, that would hopefully protect Erich up to a certain amount. Now, liability you can usually change. If you want $1 million, $2 million liability coverage, you can do that. You're going to pay a little extra, but you can go ahead and do that on most insurances. The contents coverage covers the inside of the home. Because you're the homeowner living in the property, it's going to cover your jewelry, your TV, your phones, your what else do people have in their home? Couches. So the contents, if you can prove that you have a lot of contents, then you can get your contents insured to what it's worth. If you have really expensive chandeliers or gold collections, then you can go ahead and get that covered with the contents insurance, or that's covered inside of a homeowner's policy. Now, landlords, again, this is for homeowners, and so you're not living in the home though. You have the property rented out, and it's important to have the right insurance policy for the right situation, or else you may not get paid out if there's a serious claim or even a little claim. So landlord policy is different than homeowner's policy because A, you're renting out the property, and it covers property and dwelling if the home burns down or there's a serious claim made to the property. And then liability is you still get bodily and property protection. And then you can add a small amount of contents, but because you're renting the property, usually it's not furnished. But if it is furnished, or you've included a shed or a washer and dryer or a fridge or a stove, you can go ahead and add some of that into contents, but usually it doesn't cover contents, but you can add contents if you want. Vacant is similar to landlord, except the property is vacant. It's pretty simple. And this is, again, if you're an investor or if you bought the home, you're not going to be living in it right away. Builder's risk is if you're building a mobile home, manufactured home, single family home. We don't deal with it too much with regards to mobile homes in parks or on land, but if you are doing some serious rehab, you want to talk to your insurance agent to make sure you have the right policy. Force-placed insurance or forced insurance is placed by the lender. If there's a lender and you've borrowed money to actually own the property, and this is written into the mortgage agreement or the deed of trust agreement, where insurance is needed on the home. The lender lent you money to purchase that home, they want to make sure that their money's protected. So if there's no insurance on the property, or if the insurance lapses, or there's not enough coverage for some reason because you changed it, the lender can go ahead and put forced insurance on your property. Now that's going to be typically expensive because there's going to be fees associated with it because the lender had to do it. And the lender doesn't care to get you the best policy. They're protecting themselves. They're not necessarily going to protect you. So try not to let this happen. We want to pay our bills. We want to make sure our lender is protected, or else they are going to put insurance, forced insurance on your property and bill you monthly in your monthly mortgage payment. Renter's insurance is for renters. This is if you're renting a place. Not if you're a landlord, but if you're renting any kind of property. Now, some landlords require this, some landlords don't. But when you do have renter's insurance, not only do you have contents protection to protect all your contents from theft, from fire, from floods, from damages, but also liability. If you're negligent and having a party and somebody hurts themselves, they can sue you, but they're going to go ahead and your renter's insurance policy is going to help pick up some of that cost. You know, if they sue you, that's what your liability protection is for. Also, they could go after your landlord, and then your landlord could also make a claim on your liability. We'll talk about that a little bit later if you're an investor. Next up is mortgagee. Mortgagee is a term within an insurance binder, within your insurance contract. The mortgagee is typically the bank, is typically the lender. This is going to be the party that gets paid from a claim of total loss. If the home completely burns down, then the checks that are written are typically to the insured party. The insured party is the person that takes out the insurance policy in the first place, and the mortgagee. This is the person that's protected. This is the mortgagee. If you don't have insurance on your property, the insurance company is going to let the mortgagee know. So if you buy a mobile home or a single family home with a bank loan, you typically need to get insurance. You get a homeowner's policy, landlord policy. If you lapse, the insurance company is going to let the mortgagee know, hey, your interest in this home is not protected anymore. You know, you don't have protection on this home that you thought you did. And before you get funded for your bank loan, the bank is going to want to make sure that you do have an insurance policy with all the correct information of the bank before they fund the deal. Additionally insured is another section. It's a party. It's an insured party on your insurance binder, on your policy. And this is a party that they don't always get alerted if the insurance lapses. But the insured party is typically a landlord, or it could be a mobile home park. Few mobile home parks, some mobile home parks around the country require that all of their residents, their homeowners living on their land, that have mobile homes on their land, or if it's a co-op style park, then everyone needs to have insurance. And if that's the case, the mobile home park typically wants to be listed as additionally insured. The additionally insured party is typically not the one that will get a check cut to them should there be a major claim to the property. We're going to talk about that when we talk about investor options. We'll talk about that more. Riders are additions to your contract, such as flood insurance, wind insurance, tornado policies, sinkholes, hail, if you have really expensive jewelry or an art collection, or there's loss of income, which we're going to talk about. So riders are additions to your policy, and a rider is, if you have more riders, then your policy premium could go up. The amount that you pay, the premium could go up. And then if you have exclusions to say, I don't want that covered, you know, hail, flood, tornado. In some states, you need to have, if you get a bank loan, you need to have tornado coverage, or you need to have sinkhole coverage. So exclusions are things that are not covered. That's usually, that's definitely, all of this, or this especially, is definitely listed on your contract or on your insurance binder, because you have to know what you're insured for. We're going to talk about that because a lot of people, especially, or not especially, but even experienced investors, don't exactly know what's on their insurance contract. We're moving along pretty quickly. Next up is loss of income insurance. This is for landlord policies, and a loss of income is for rental income when serious claims are made. If you have to make a claim on your property, there's been serious damage to the property that you have insured, that you have rented out. If you can no longer rent that property, then you're losing that rental income. So you can have a loss of income insurance amount up to $5,000, $6,000, $10,000, $20,000 to protect you in the event of you cannot rent out your property due to a claim that is actually covered on your insurance policy. If it's a claim that's not going to be covered on your insurance policy, you're not going to get that loss of income insurance. But if it's a claim that can be made, like a valid claim, a valid reason, you know, why your home got damaged, or there's a problem with your home, or there's a catastrophe, this loss of income insurance can protect you. You can still have those payments coming in every single month, or you can get a big check, you know, all at once, depending on how the policy is written. Wear and tear is a general term that most of us understand. It's the normal and expected deterioration over time. Wear and tear on all objects. They're new in the beginning, and then they kind of deteriorate over time. Wear and tear, the reason I bring it up is because that is not included on most insurance contracts. If your home or your roof has, you know, wear and tear because it's 20 years old, your insurance company is not going to pay for a new roof. So wear and tear is not included. However, on a home warranty, wear and tear is included. Now, a home warranty is not home insurance. A home warranty is purchased through a separate third-party company and is completely optional. If you're a real estate investor or mobile home investor, you may never deal with home warranties. Home warranties are warranties on the appliances and some of the mechanical systems in the home. The heating and cooling systems, the washer dryer, the stove, the fridge, the AC. That's typically covered in a home warranty. Some home warranty companies have different levels of what you want to be protected against. They're usually under $300, under $500 a year, and they can be transferred from one party to another. So if you, as the investor, you're selling a mobile home for all cash, it's in a park, it's on land, you get a home warranty, you pay the yearly premium for the home warranty in April. If you sell that home in May, well, up until the next year in April, the new buyers have protection. If their appliances break or if something is damaged, they can go ahead and make a claim. There's going to be a small deductible, usually under $100, and the owner can go ahead and get a brand new appliance, or a contractor can come out and fix that. and that's what a home warranty is. Again, this does include wear and tear. Wear and tear is not covered on regular insurance. I hope that all made sense. Now, whether that was just a recap for you or you learned some new stuff here, and I hope that you did learn some new stuff, we're going to apply some of what we learned right when we talk about Dan's story. So let's go into Dan's story. That's just audio that you're going to hear, so I wanted to put some B-roll footage of me driving through a couple mobile home parks that that are in my area and that I do business in. And then also one or two things happen, you'll see about that. But let's go ahead and jump into Dan's story. Then we're going to come back and talk about investor options. How many actual homes did you have? Like, I remember that one that had hail damage. Was there more than that?
Yeah, it was 2 roofs at one time.
From the same storm?
Yeah.
Whoa. Well, let's just get into it. We're recording. What happened with those 2 homes? I mean, was it, yes, same park? You heard it? What happened?
So I happened to have 2 homes in one park. Both are 2 homes that I had fixed up. One already had a brand new roof on it, and the other was a older roof, but it was in good condition. So I was actually, I heard about the hailstorm in Golden, Colorado. If you're not familiar with it, it's come through in the summertime. It's just, right on the front range of the Rockies, and unpredictable weather happens all the time. But as a result, there's always big hailstorms that, take place in that area. So I happened to be on the East Coast at the ocean, celebrating my birthday, and I got a phone call from my handyman, who happens to be a roofer by trade, telling me that my roofs were totaled, and I nearly had a heart attack because I basically put a lot of money into these homes, and they weren't sold yet. I had investors' money in on the home. I did have insurance policies, thankfully, and I had contacted my insurance guy, and to make matters worse, my near heart attack kind of elevated itself, because he told me that I didn't have coverage for hail damage, and so I thought I had to basically buy 2 new roofs for my homes. When a roofer tells you that your roof is totaled, when I first started in the business, I thought that would mean like water would be coming through the roof right away, but there's an underlayment that if it gets hail damage, it basically over time will, tear and create leaks, more or less. And it wasn't just the roof itself. I mean, we had vinyl siding that had looked like a machine gun went through it, and the vinyl on windows gets damaged, skirting gets damaged, so windows get cracked.
Yes.
A lot of that kind of stuff happens. So yeah, it was a frightening experience, because when your insurance guy tells you that he doesn't think you have coverage, that's really nerve-wracking. So I ended up contacting the corporate company, because it was a broker that I had gone through. I contacted the corporate office, and it turned out I did have coverage. So
what a weird insurance guy. Just kind of like, I don't know. Well, read your policy. See you later. Wow.
Yeah, it was not. That was the last time I used them, to say the least.
What company was that through? The underwriter or the main?
Well, it was a local company here in Colorado that is a representative for Foremost.
Okay, so Foremost is good.
It's like an agency. Yeah, Foremost is pretty much like the leading brand for it. Pretty much, you don't go through Foremost direct, really. You go through one of their agencies, kind of like a State Farm rep. How they have it set up. It's basically the same thing. There's little agencies, independent agencies that are, representatives of that company that you get your insurance from. So, I ended up contacting them direct, and thankfully, if you're going to file the claim, like I was able to file the claim, but then when it came time toward working with the adjuster and everything, I had a really good relationship with this company that did roofing and does work with insurance claims, and they were working with the insurance adjuster for me. So basically,
hey, brother. You got a business card? Putting the axles on, or taking them off rather, taking them off. Just set this home. Great. Beautiful, double wide. Thank you, brother. Always a good idea if you see people moving out, you see handymen, especially if they have like a sticker on their truck.
In terms of getting funded is really easy, actually. You know, the adjuster comes and verifies that the damage is there, and the moment the adjuster, the day after the adjuster came, I was funded for both of my homes, and it's just a deposit, direct deposit. So it landed right in my account.
Was that enough to get everything done?
Yeah, and some, I'd say. And in fact, actually, with one of the homes, it was almost a blessing. You know, I redid the roofs. I did fix the major repairs. You know, in one instance, one of the awnings was damaged, and frankly, it was, you know, the metal roof on the awning, and I got funding for that, more or less. And I didn't fix that. I mean, you can do whatever you want with the money, right? And that wasn't something that was a real detriment to the sale of the home. In fact, it was not really noticeable unless you're in the roofing industry. So I ended up just pocketing that money, and frankly, it made my deal a little sweeter. For one of the homes, luckily, I actually had a box of extra siding, so we only had a few pieces. I actually got a little lucky on the vinyl part of it. You know, we had a few pieces that got damaged. I also had extra skirting. So we were able to replace that within a day, just on my own. But, you know, it's kind of sad because this happened about 2-3 years ago now, and there's still homes in this community where people didn't have insurance that are still looking like destroyed, basically.
That's pretty much
one thing I was just going to say. All I had to do for my claims, though, is just pay the $1,500 deductible. So, yeah, it was a little bit more money out of my pocket, but I mean, instantly I got that right back.
Any reason why you chose the $1,500 deductible instead of like $500? Or
honestly, I think that was just what was given to me. I mean, I don't like view plans. Kind of just trusted my agent, I guess.
That's so you and most other people, me included, back and it's we don't want. Like, depending on the agent, we can sometimes feel like, oh, are we bothering you? Like, you know, oh, am I asking you too many questions? You know, forget that. I mean, I want to deal with somebody. I want to think of a bunch of like if-then scenarios. I want to think of silly questions. I want to think of big questions. And I want to ask them that, you know, things that just all the different unique possibilities and things that could happen. If they don't know, they should find out an answer. I mean, you are not being a bother. And if you do feel like a bother, you know, you can find somebody else. But I think that's so human nature. I know I was very much like that for a long time. Just, oh, well, must be, they know what's best, you know.
Oh, exactly. Yeah, you definitely, just dealing with that guy, you know, he was in a panic situation, you know, going to the guy that owns the little agency, and then him telling me, well, I don't know if you have, I don't know if there's coverage on hail damage. I mean, first off, they're supposed to know that, and then that's my go-to person, and they didn't really offer much support. You know, they just told me to call the corporate number, and it was so hands-off that it was definitely was a little angry with them afterwards. And again, that's why I haven't chosen them as an insurance company. I mean, they've actually called me up and asked me for, policies if I could help them out with trying to hit their sales number or whatever. And kind of hilarious because I don't want to recommend them just because the situation that I ultimately experienced with them.
Are you always going to have insurance moving forward? And what would any advice be to somebody that's, you know, debating on it? Well, I don't live in an area with hail, so I don't need insurance.
Yeah, well, I highly recommend insurance. Now, if the home is if you're getting the home for less than $300,000 or something like that, and you're not putting any money into it, maybe it's not worth it. Or you already have somebody that's going to buy a home on your wholesaling, or it's like a type of transaction where you buy it one day and the next day you sell it. Then maybe I wouldn't have a policy on it because I mean, yeah, there's homes that in those type of instances that I haven't had policies on, but the transaction of both between the seller and the buyer was made just a few days apart. You know, it was a quick transaction. yeah, I didn't have a policy then, but if I have a home on a note, I'm going to always have a policy on it because that's my best interest. But then also, if I'm putting a lot of money in the home, I definitely recommend it. I mean, if you have upward of $10,000 and more than that, it's just a good way to protect your interests. I mean, let's say something happens with the home, or even let's say now with my coverage, I have $100,000 coverage. So in case of a handyman steps on a nail or something like that and tries to sue me, I have coverage for that, protection. So
Very well said.
whatever it is, it's you definitely want to protect your best interests. I mean, it's a little cost for such a big relief, basically.
I want to say thank you to Dan for coming on the audio and really opening up, confiding, and being so candid in that quick interview where we talked about those 2 properties that got that serious hail damage. And what I'm hoping that you can do is really sort of have empathy when it comes to listening to Dan, to sort of put yourself in his shoes. Personal experience, things that happen to us ourselves, is the best teacher, but it's also the most stressful, give you the most gray hairs, and is the most costly. So if you can learn through reading other people's articles, listening to interviews, talking with people, hearing other examples, and really internalizing that, putting yourself in Dan's shoes. This business is hard enough. It's challenging enough. Mobile home investing, real estate investing, there's enough hurdles and obstacles, without having you're on a path here, and you have clarity to like everything that you think is going to happen, and then we're sidetracked by a hailstorm or by a wind blowing off our roof or by some other slip and fall accident on our property. So doing this alone is challenging enough, but not having insurance, not having the proper protection, just sort of adds or can add to our stress. And thank God if you haven't had any insurance claims, if you're a long-term active investor or brand new, but that always can change. So let's talk about some investor options. And I say options because you're an adult. You can do what you want to some extent. Sometimes you have the option to choose insurance. Sometimes you don't have the option. We're going to talk about that, when you would want it, when you wouldn't want it. I'm going to try to keep this as brief as possible while still being very thorough as possible. If you have any questions, you can reach out to me at support@mobilehomeinvesting.net, or you can comment below. Let's jump into this. At the top, we're talking about purchasing strategies. And I'm spinning a little bit. At the top, we're talking about purchasing strategies and some of your options when it comes to insurance. At the bottom, we're talking about selling or renting and some of your options, and we're gonna go into detail. These little codes up here, MHP and MHL. MHP is mobile homes inside of parks. That sort of pertains to mobile homes inside parks. And then mobile homes on land, on private land that you also own as well, is what MHL stands for. Let's talk about if you have a conventional loan. If you're buying this mobile home, or this, mobile home in this case, mobile home with hard money or with a conventional loan, then you're not going to get that loan funded in most times, or most cases. If the bank knows what they're doing, then they're going to require that you have an insurance policy on the property, probably a landlord policy or a vacant home policy, and the mortgagee is going to be the bank. The bank wants to be listed as mortgagee so they know that they're protected. You don't have an option, and if you don't pay that, the bank's going to be alerted. They're going to put forced place insurance on your property like we discussed earlier. Also, a mobile home in a park, a mobile home on private land, you can purchase with owner financing. This means that you take the deed, or you take the title, or you take ownership legally day one, and you're paying on a small note or mortgage or deed of trust for the amount of money that you owe to the seller. So this can be in a mobile home park or a mobile home on land. You want to get vacant insurance or landlord insurance. Now, some owners, if you're buying from a person that was in their home, an owner occupant, they may not know to ask you, hey, get insurance on this property to protect my interest. Because again, if they're just a traditional, regular, homeowner, they might not know to ask that. So make sure to protect your seller. If this home burns down, and hopefully, even if it did burn down, if you didn't have insurance, you would still make all the owner financing payments to the seller that you have agreed to. Even if this is in a park and the property burns down, on the lease agreement of the park or the rules and regulations of the park, that the investor, the person that bought this home from the seller, is probably responsible to get that burnt out shell of a mobile home off of the lot, and then you will need to give the park a not brand new, but a clean lot, and then you can stop paying lot rent. But you're probably going to still have to pay lot rent every single month until that burnt out mobile home is off of that piece of land. So you want to go ahead and have a vacant or a landlord policy. Typically, if you do owner financing, you don't have to, but if you want to protect your seller, then you would want them listed as mortgagee. Or I put none here because it's your option. If the seller doesn't ask you about insurance and they haven't watched this video, then they might not know to have you get insurance. But then again, even if your home burns down and you don't have any sort of insurance on the property, still pay the seller everything that they're owed, everything that you promised them. That's just the best way to do business for a long-term reputation. And yeah, we do what we say we're going to do. So whether there's insurance on the property or not. Additionally insured is going to be either the mobile home park. Again, some parks, very few, the minority of parks around the country, they require people to have insurance, and they're usually listed as additionally insured. Buying a mobile home with your own cash. First things first, congratulations. If you're buying a mobile home in a park, you have a couple $1,000s into it, you have 20, 30, 40, 50,000, or less than 10,000 into it. It's up to you. If you own your property free and clear and nobody's putting any pressure on you to get insurance, most of us just default to, I've rolled the dice before, or I'm not too worried about the property. I have some money into it. I don't have a lot of money into it. It's okay. I don't need insurance. If it falls down, if it burns down, I'm okay with that. I'll take that risk. Remember that you still have to get it off of the land if it's inside of a mobile home park. And if there's a slip and fall on your property, or there's a dog bite or something else, you could be sued and you have no protection, because these policies do come with liability like we discussed before. If you're buying with other people's money, similar to owner financing, but you're not, you're giving the seller all their money. You're borrowing money from friends and family. You should, and I say should because it is your option, your friends and family won't usually ask you, hey, here's $10,000, but make sure that I'm listed as the mortgagee on your insurance policy. Most friends and family just don't consider that or think of that. So don't screw your friends or family if the property burns down or there's a major claim. Your lender, your friends or family, they should get paid out. You can be insured up into the amount. You don't have to insure the home for as much as the home's worth. You can just insure it for the amount of money that you borrowed to go ahead and protect your lender, your friend, or your family. And I also put none here because, again, it is your choice. You're an adult. Additionally insured is going to be none, or the mobile home park like we discussed before if the park wants to be insured, but that's the minority. Now, mobile homes on land, you may purchase the property subject to the underlying mortgage or wrapping the underlying mortgage or deed of trust. Essentially what that means, in very abbreviated terms, there's a deed typically to a property, and there's a mortgage or a deed of trust or a loan. And usually those names are the same, the person that owns the home, the person that took out the loan. Well, in a subject to transaction or purchasing the home and then wrapping the underlying note, when you purchase it, you're taking possession of the deed right away, you or your company or your trust. By the way, we can get insurance in the name of a land trust, of a personal property trust. That's usually not an issue. But the original note, the original mortgage or deed of trust, that stays in place. So you're going to kind of take that over. You're not going to assume it, but you're going to keep paying on the underlying loan. If that is the case, if you talk to 10 different investors, you may get 10 different answers on this. And again, I wanted to give you investor options of what you could do. So some folks say to leave the current, if there's a bank loan on the property, the homeowner who's selling you the mobile home on land, they're going to have a homeowner's policy on their home. They have insurance, and their insurance policy is a homeowner's policy because they've been living in it. Well, you come in and buy that mobile home. Some people keep that original insurance policy and simply have the seller, the person that used to own the home that sold it to you, they have the seller change it over to a landlord policy. So the seller is still the one as the insured party. Now, what I do is go ahead and change that. I cancel that policy and I put on another or a different policy, start a new policy with my agent, maybe with the company that had the old policy. But I do that because I want to be listed as the landlord. If you're going to be selling the home quickly right away, then you may not want to do that, and we'll talk about it. But if you're going to be renting the home out, you're buying the home subject to the underlying mortgage, and then you're renting the home out, you can get a new landlord policy. And some people don't like to do that because the bank will understand that you've sold that the home was transferred, that the deed was transferred, because there's a new policy listing somebody else as the insured party. So you can get a brand new policy as a landlord, or you can keep the old policy and have the seller that you bought the home from transfer it to a landlord policy. I couldn't think of what I wanted to talk about, or what I wanted to say. Now, if you do get a brand new policy on the home that you've purchased subject to the underlying loan, you still want to list the bank as mortgagee. The bank still needs to be protected, or they're going to put forced place insurance on it. So the bank wants to be protected, and the additionally insured party is going to be the seller. That's the way I like to do things. However, some people, again, they don't want to change the original policy. Now, the problem, everything's fine and dandy in that case unless there's a claim that's going to be made, because your name is not going to be anywhere on the insurance policy. It might be listed as additionally insured, but you're probably not going to get paid out if there's a serious claim. You want to have a power of attorney from your seller, but the seller, if the home burns down and your seller it's the original policy, and the seller simply, so it's the old policy, but the seller changed it to a landlord policy, the seller, the person you bought the home from, they're going to get a check along with the bank. You're not going to receive anything in that situation. So personally, I changed the policy to a new landlord policy with me or my company as the insured party. The bank is still the mortgagee, and the bank knows that you took the deed. They could call the loan due, but that's not a likely that's a very, very calculated risk, and that's something I'm willing to take on. Again, if you don't know what I'm talking about right now or are unsure about that, you can email me, you can reach out to someone else local. This is more of sort of an advanced topic, but I hope that made sense. And that's if you're going to buy the home. Typically a mobile home on land, a mobile home in a park, that's a much kind of more complicated strategy. You can still sometimes purchase a mobile home subject to the underlying loan in a park, but it's a much more involved process because the bank is going to hold on to the title, or they're going to hold on to the ownership depending on your state, and they won't let you change the title until that underlying loan is paid off. So if I've completely lost you, then I want to reel you back in, because we're going to go talking about selling a mobile home now. So if you're selling a mobile home in a park or on land, you're selling for all cash or bank financing. Well, ideally, the homeowners that are buying it from you, they're going to get insurance, which you can educate them on because you've watched this video, and the importance of having homeowners insurance, both to protect the structure and the liability if something happens. But it's not really your call. I mean, if you're selling it for cash, you take the money, you walk away, you go on to the next deal. If you're selling the home with owner financing, you've sold the home, just like right here, the title or the deed has transferred. Right here with owner financing, the title or the deed has transferred as well. So the title and deed has transferred. The buyer is now paying you on a small note or mortgage or deed of trust. Make sure you know what you're doing when you're selling properties with owner financing. When you're buying them, there's not as much rules and regulations, but when you're selling properties to end users that are going to be living in the mobile home, you definitely need to have your T's crossed and your I's dotted, have the proper paperwork, procedures. Having more clarity is better than having less clarity. And when you sell this property, you are the bank. So you're not really going to have any insurance of your own, except maybe an umbrella policy, which an umbrella policy is just a large liability policy. So if you have, if a property is insured to $100,000 and there's like if you own property and you're selling it and somebody sues you and you have $100,000 normal liability coverage on a property, but they sue you for $1 million. Well, you can have an umbrella policy over you and your entire kind of organization of homes. You can transfer in and out properties. You got to keep your insurance agent abreast of that. But that umbrella policy is a large liability policy. So that's what you can think of it as an umbrella policy. Now the new homeowner should, and I say should because you're the seller here, you're the one in control, they should definitely obtain homeowners insurance, listing you or your company as the mortgagee. Again, you want to have your property protected, your interest protected, because if you have $100,000 coming to you, or $50,000 or $20,000 coming to you, then you will not get that should the property burn down. We're going to talk about a situation with owner financing that you may not want to have the properties insured. We're going to talk about that in just a little bit. Now, selling the home via a wrap. So if you purchase the home subject to the underlying loan, and then you sell it with a wrap, I want you to go ahead and, well, this is a strong suggestion, but if you're selling the home, now again, you're selling the home here. You're selling the deed or the title right here. You're selling the deed of the mobile home right here. This is for a mobile home on land most of the time. And if you're selling via a wrap, and if you don't know what that means, we're not going to get into it on this video, but it's an advanced strategy to sell the mobile home and wrap the underlying note. And you're going to be selling the home. So again, there's no insurance for you. You could have an umbrella liability policy just to protect yourself in general. But the new homeowners should definitely obtain a homeowner's insurance. Now, the mortgagees are going to be the bank, because if there's an underlying loan that you're wrapping, just like up here, this bank wants to be listed as the bank. So the first position of the mortgagee is going to be the bank. The second position is going to be you or your company. So there can be two mortgagees, and if there's a huge claim or the home burns down, not only is the bank getting paid out, the bank's getting paid their money first, but then you are going to get paid, the checks are going to come to you, to the bank, to you, and then to the homeowner. Now, rent to own. Rent to own is in a mobile home in a park or a mobile home on land. Now, rent to own is different because right here, selling via a wrap, owner financing, selling for all cash, you've sold the title day number one. With a rent to own contract, and there's no real rent to own contracts, it's just a loose term, but a lease purchase contract or a rent credit type of program, or a land contract type of program, means that the person inside the home that is buying the home from you, because you're selling it as the investor, the person buying it doesn't have ownership. They don't have any, well, they have some equitable interest depending on the paperwork, but they don't own the home. They don't own the title. They don't own the deed. They don't own it until the very end of the contract, at the very end. All these ways, they own it day one, but with these contracts, they don't own it to the very end. So you're still the owner as the investor, meaning you should have landlord insurance on the property. Talk to your insurance agent to make sure that that is the case. But with these type of, and again, you don't have to have landlord insurance if you don't want to. You can just roll the dice, but it's very strongly urged. Obviously, that's been the theme of this video. And your tenant buyers should obtain renter's insurance and list you as additionally insured. Now, here's the thing when it comes to renting out a mobile home. Again, you should have renter's insurance. The renter should list you as additionally insured. It's not just to go ahead and to protect the renter or to protect the tenant buyer inside from, losing their contents, their personal possessions if there's a theft, if there's a fire, if there's a flood, or the home just falls down. Hopefully the home wouldn't just fall down for no reason. But if something like that did happen, not only would their contents be covered, more of kind of a selfish reason for you as an investor of why you want your renters to have renter's insurance. If there's an issue with the home, there's a major claim, your landlord policy is going to go ahead and cover that major claim, but there's usually a deductible, $500, $1,500, $1,000 or more. And if if your tenant buyer or your renters have renter's insurance on the property, you can make a claim against that amount that you had to pay for the deductible. That was a lot of talking. If you're still watching, I thank you very much. Let's talk about two different examples of when you may not want insurance on your properties. So if you're buying a mobile home and then selling it a couple days later, you may take a calculated risk and say, you know what, I don't want insurance, I don't need insurance, I'm not even going to bother with it. That usually comes out of maybe ignorance, I don't want to be insulting, or being naive, or just being lazy. And I'm guilty of that, but realize that if you get insurance on a property, you can just have it on there for a few weeks or a few months. If you pay for the entire year, or you pay quarterly, or you pay monthly, if you have a bank loan, they usually want you to pay it like in a year all up front. But if you don't have a bank loan on it, you can just pay monthly or quarterly. And if you pay for the entire year and you cancel it after a month, you're going to get those 11 months back. So, but if, just I realize that I'm talking to the public, and if you don't want insurance, you don't necessarily have to if you don't have a bank loan. But if you're buying it on a Monday, you're going to sell it a week later or a couple days later, you might not want insurance, or you don't necessarily need insurance on the property. And it's a calculated risk. But then again, something could happen, absolutely, during that time. It's a minimal risk, but it definitely could happen. Either somebody trip and fall, or a dog bite, or the home, something happened to the actual home. So that's one reason why you may not want insurance. Another reason is more of an advanced strategy. If you have, let's say, 50 mobile home notes that you have out there, you have 50 mobile homes that you sold via owner financing. You know that all of your tenant buyers, all of the people that are now buying the home, that are living in the home, the owners of the home, they have homeowners insurance because that's what you've written into your contract. Well, you know that their insurance policy every single year costs $1,000, costs $500. If you have 50 properties out there and you've never had a serious claim made to your homes or any of your homes, this is more so for mobile homes in parks, not as much as mobile homes on land, because mobile homes on land, you're probably going to have thousands and thousands and thousands of dollars into that property. Even if you didn't pay that up front, you might have taken the home subject to the underlying loan. There's a lot of value within that mobile home on land. So mobile homes on land, it's a good idea to most always have insurance on. But mobile homes in parks, if you're an experienced investor, then you may take a calculated risk to self-insure the properties. And what that means, that's sort of a loose term, but essentially, if one of your home buyers or all of your home buyers, you can give them the option to say you can pay for your normal insurance homeowners policy, listing me as the investor that I sold you the property, listing me as mortgagee. And if something happens to the property, it burns down, you're protected, I'm protected. If there's a fall in the property, you're protected. If the contents, something happens to the inside, you're protected. So that costs maybe $1,000 or $500, and the buyer knows that, the owner of the home knows that, and they can get a regular homeowner's policy, or they don't have to get that homeowner's policy because you don't mandate it. So you could go ahead and tell your buyers, let's say you have 50 properties out there, you can tell them, listen, you don't have to pay the $1,000 homeowner's policy, you can just pay me an extra $50 a month to basically self-insure the property. Now that's not going to do anything for them except protect them in the event of a total loss. You're not going to pay them any money, but you're not going to go after them for any money that is owed to you. So if you're still owed $30,000 on a mobile home that you sold in a park, well, you're not going to get any of that money back. So it's not protection, it's not insurance, it's just extra money that you're getting every single month and pocketing. And again, this is an advanced strategy. If you've been holding these notes for 5 years, you've never had a major claim with anything like your home's being damaged, you could tell all your 50 people to, you give them the option to start paying you an extra $30, $40, $50, $60 a month so that they don't have to get traditional homeowners insurance. Again, that's not going to protect the home in any way, it's not going to protect liability, it's not going to protect the contents, it's quite risky, but it is a calculated risk if you're an advanced investor. I mean, with those insurance premiums, if you have 50 properties, that can be $50,000 that people are paying in annual insurance premiums. If you get half of that, that's 25 extra grand a year that you're pocketing. That can pay for a number of mobile homes a year, depending on your area, or at least one or two. So with that said, that's a very advanced strategy. I hope I covered that in enough detail, but didn't want to go into it too much because it is more of an advanced strategy. And when in doubt, having insurance is the right way to go. With that said, we're going to talk about sort of what to do next when it comes to you wanting insurance, how to get the best policy, how to feel protected. We're going to talk about that after there's a kind of another section right here where it's like what to do next before we jump into Erich's story. But right now I want to shift gears and talk more about homeowner options. If you're actually going to be buying a home and living in it, what are your options? Through the magic of editing such wonderful graphics, you can see now the different options behind me. This is for homeowners that are living in a property. And I make no delusions that you are a homeowner, and or you may be a homeowner if you're watching this part of the video, or if not, you're an investor. Stick around because we do talk about some investor related things. But if you're a homeowner, I don't make any delusions that it's completely your option as an adult to have insurance on a property or not have insurance on some properties. But I want you to have more clarity and know the pros and cons of making this decision, because whether you make this decision or not, you're making it. If you don't make it, you don't have insurance, but you still sort of made the decision. So, if something happens, I don't want you blaming anybody else. We need to know what we're doing, why we're doing it. So that's why we're talking about this section. MHP and MHL, this quick designations, this is purchasing mobile homes, and then this is sort of renting it out if you decide you want to be a renter. But these options are for mobile homes in parks, is MHP, mobile home inside of a park, and then mobile homes on private land. You own the land, you own the mobile home. That's what MHL means. Most of these are for both, and then actually all of them are for both, so I didn't really even need to put that. If you're buying a home with a conventional loan, now this is kind of broken up into two different sections here, and I'll explain what I mean. If you're buying a mobile home from a conventional bank or from a lender, they know what they're doing. They lend money on a regular basis, and written into their contract before they fund the deal, you need to prove that the bank is the mortgagee and you've insured the bank for as much money as they're lending you or more. They might also have other criteria of coverages that they want to see, but the bank is not going to fund the deal. If it's a legitimate bank or credit union or lender, they're going to want to see an insurance policy, a homeowner's policy, because you're buying the home to go ahead and live in it most likely. They're going to want to see a homeowner's insurance policy with them listed as the mortgagee, and potentially the mobile home park listed as additionally insured. The bank won't really care about that, but some mobile home parks, a minority around the country, require the people living inside of their community or their co-op community or their regular mobile home park, everyone needs to have insurance on their mobile homes. So if you're buying from a conventional bank, then typically you need to have homeowners insurance. You don't have an option. It has to be insured to the amount that the bank lent you. Now, if you're buying with owner financing, you're an end buyer who's going to be living in your home, and you're buying it from a seasoned investor that knows what they're doing, they're also going to require you to have an insurance to protect their interests, and they want to be listed as mortgagee. So they're the bank in this situation if it's a professional investor, someone that buys and sells and operates a real estate investing business on a regular basis. Now, you might be owner financing the home from just a regular average person, somebody that was living in the home, and you talk to them and you say, hey, I don't have all the cash, but I want to make you payments. They may not know to ask you, hey, make sure you get homeowners insurance on this. I'm going to give you the title and become a lien holder, or depending on your state, there may not be titles. There may be other instruments that show that or a deed if the mobile home is on land. But if you're buying from just a regular, inexperienced, average person, somebody that was living in the property, they may not require you to have homeowners insurance, which is a big mistake on their part and on yours as well. I mean, you're going to save money because you don't have to pay that initial premium, but if anything happens to the home, you're not protected from, the home. You may have to pay back all the money that you promised to pay them anyway. If there's a dog bite on your property or a slip and fall or something due to your negligence or not your negligence, you may be sued and you're not protected. So having a homeowner's policy is very, very wise, and it should most likely be required. But if you're buying from somebody naive, they may not require that you have a homeowner's policy. But it's very, very smart to have that. In my opinion, you don't have to. But if you're buying a home, and you owe somebody thousands and thousands of dollars, it would be wise to protect their interest, to protect your own. If you're buying the home with your own cash, first of all, congratulations. And secondly, you don't have to have homeowners insurance. It's completely optional unless the park requires you to have it. But again, we all are adults. We go the path that we're going to go. We have to sleep in the beds that we make. And if something does happen, if you are in a mobile home park and your home burns down, you still may be responsible, you probably are going to be responsible to get that burnt off mobile home off of that lot. And you still have to pay lot rent until you leave that lot free of debris, take off the anchors, take off all the cinder blocks, take off everything, the home itself that's now in rubble. You're going to have to take that off slowly or hire someone to pull it off. It could be up to $3,000, $4,000, $5,000, $10,000 depending on the home, just to get that removed. And if you don't have insurance, you're paying that. One way or another, or the park might sue you or go after you for that money. So when you buy a home for cash, you don't have to have homeowners insurance, but it is recommended. If you do, you're not going to have a mortgagee because there's no mortgagee, and the additionally insured party is not going to be anybody. It might be the mobile home park if they require it, but again, that's a minority. If you're buying with other people's money, like friends and families, it's good to have homeowners insurance. Now, just like a naive person that's owner financing you the home, they're giving you the ownership and then they're taking monthly payments, that's basically happening here, except you're borrowing money from your friends and family. They're giving you 10, 20, 30, 40, 50 grand, and they might not know to say, hey, make sure you get insurance on this property if it burns down, if there's a huge catastrophe and the home is totaled, or if there's a big damage to the property, we want to be protected. And your friends and family may not think that, because oftentimes we think of the worst sometimes, like the worst thing that could happen, and we want to prepare for the worst. But when it comes to insurance and actually paying that money and, oh, I'm just wasting my money on this insurance premium, just like you're going to hear in Erich's story as well, he was not expecting that. He was out of the country. He had no issues before, not had to make a claim, and luckily he had insurance, and we'll talk about that. If you do have homeowners insurance, the mortgagee is going to be the lender, aka your friends and family. They're going to be listed as a mortgagee. But if something happens to your property, you don't have insurance, no one's going to pay your friends and family all that money. You're going to be out of a home. They're going to be out money. If there's a dog bite on the property, you don't get any liability insurance there or any other. I keep saying dog bites, but there's other things that could happen. Slip and fall, somebody gets hurt or hit by a car on the property. I mean, just a number of things. Burnt, something like that. Lease purchase. Now, this is if you're purchasing a mobile home on a piece of land in a park, with all these strategies here, you get ownership right away. You get ownership day number one, you're listed as owner of the property. However, with a lease purchase strategy, and there's a couple strategies this might be called, rent to own, rent credit, land contract, and if you purchase the home this way, you're not actually purchasing the home until the very end of the contract, or a lease purchase or a lease option. You're not purchasing the home until the very end of the contract. That means that you're not going to get a homeowner's policy because you're not the homeowner. You're not going to get a landlord policy. You're not the homeowner, so the only thing you can get is a renter's policy. And this renter's insurance is going to protect the contents of the home. Your contents, your possessions in the event of a theft, of burglary, of a flood, of damage, of catastrophe. That's what your renter's insurance is going to protect. Or if something happens and somebody sues you, then your renter's insurance is hopefully going to step up and pay for some of those bills as well. Now, this is, and I hope that you stick with me on this, if you're buying the home from an investor or from somebody that's selling you the home with a lease purchase, it's probably going to be an investor of some kind, whether they're ethical or they're not ethical at all. I'm going to link below in the description to a video I did on rent to own and sort of what to know and what to watch out for. But if you're buying the home on one of these programs, the landlord that you're buying from, ask if they have a landlord policy on the home, and try to see that insurance binder. Try to see that page that shows that, okay, they're up to date, they're current on their landlord contract. Because if you're buying the home and it's going to take you 10 years to pay this home, this strategy, you're paying for 10 years and then you're going to own it, or then it's going to switch over into your name. Well, for those 10 years, if something happens on the home and there's no landlord insurance, there's no any kind of insurance, but the proper insurance for the landlord to have would be a landlord policy. If something happens to that home and it burns down, if it falls down, if it's no more, you're out of a home. The landlord's out of income that they were receiving, but you're out of a home. All that money that you put into the home and you thought, hey, I'm going to be protected, I'm great, this is wonderful, me and my family have a place that's wonderful and we love the area and we're going to have a long future here. Well, all that can crumble because the landlord was cheap or was ignorant, or I don't want to project anything onto anyone that I don't know, but clearly there was an issue where that person did not have insurance. They didn't watch this video, they didn't know about the importance of having insurance to protecting not only their interest, but your interest as well. And if you ask the landlord before you purchase the home, or maybe you're already living in the home, if you ask them to see the landlord policy or see a copy of it, you won't be too intrusive. I mean, be nice, be tactful when you ask that question. But if your landlord is being dodgy, if they're not answering your question, if they're ignoring you, if there's some issue like that, again, I don't know why somebody would be kind of dodgy about that, but if they did, if something smells fishy, then you may want to figure out what's going on. You may want to try to understand if there is a landlord policy to protect this home, that you're the one that's, you're the one that's buying that property. So there should be a landlord coverage that that the person selling you the home should have on the property. Now, in reality, you in your monthly payments, that you're making on this home, the profit that this landlord is selling the home for, I mean, they're not doing it out of the kindness of their heart. That profit they should be using to pay for a landlord policy so that they can keep selling the home to you, so that you can one day buy it. And if something happens, so it's on everyone's best interest for the landlord that's selling you the property to have insurance, and then for you to have a renter's policy as well. Renting out the mobile home. I talk about this because when you're a homeowner, if you're going to sell the property, or if you're going to, if there's anything that a homeowner is probably going to do, it's going to be rent out their property. You can go back and look at the investor options if you're going to sell the home creatively or some type of way. But if you're just renting out the home, you want a landlord policy where you're the one insured. If you own the home and you're renting it out, you are the one that's insured. You're the landlord. Just like the homeowner, you're the one insured. You're the one that's creating the policy. But then your renter should also have renter's insurance listing you as the landlord. Now, that's not only going to protect their contents, but it's also going to protect them if they have a party in the home and somebody hurts themselves. That person can go after that renter's insurance policy, because renter's insurance comes with some amount of liability. And as the landlord, you can ask that they have more liability coverage than you can determine that if you want higher liability coverage for your renter. You wouldn't necessarily need to do that, and if you thought your renter was that risky, then you may not want to rent to that person. I hope that all made sense. If you have any questions or concerns, you can email me at support@mobilehomeinvesting.net. You may be asking yourself what to do next. In the case that you do want insurance, or you don't necessarily want insurance, you haven't committed just yet, but you're open to the possibility, I encourage you to call at least 5 agents, 5 mobile home agents around your area. You can go ahead and go online and search for mobile home insurance companies near me, near your area. Put in your city, put in your state. You're going to talk to agents that some of them represent 1 or 2 or 3 companies. Other insurance agents represent 12 different carriers or 20 different carriers. Your insurance agent should be friendly, knowledgeable, helpful, not make fun of you, not be, rush you in any kind of way. Really call around to at least 5 different companies to understand your options, what coverages you can get, who you like to talk to, the premiums on these different policies. Some insurance companies are credit-based. Some states are credit-based, where they want your social security number before they give you a quote. If that's the case, try to get a quote without giving your social security number, so you don't have to get dinged by your credit a bunch of different times. So try to get kind of a quote without giving any social security information away. But do call up different insurance carriers and ask them questions. In fact, before you go ahead and call any insurance company, really think and put yourself in the shoes of, what do I want to be protected against? What do I not care so much about? What kind of property do I own? What kind of property am I going to be buying? Feel free to call up an insurance agent to ask those questions. That's what they're there for, to help you, to help the public, to answer questions. They should be knowledgeable, helpful. And then when you do talk to an agent, you're going to talk to a few, they're going to typically email you quotes. And actually, let's put up on the screen what a mobile home quote is going to look like. Now, it's going to come with 5 or 10 pages, and there's the pages are all the legalese about what's covered, what's not covered. This is the front page of a mobile home insurance quote. You can see that there's the homeowner's information. This is a landlord contract, but this is the owner's information. You can also see the insurance agents. I blurred that out, but their information is up at top. You have the mobile home information below that. Then you have the coverage amounts with the coverage limits, and also the deductibles listed. You can see the loss of payee. I'm sorry, the loss of income is shown right here. And then below that, there's exclusions of what is and what is not covered. And below that is the premium amount. And there's also usually discounts if you pay the insurance premium in one year full, or you pay the entire year up front. You may be eligible for other discounts as well if you bundle your home and auto and life insurance together, or you have a number of insurance policies with the same agent or the same company, or you live within a certain amount, or your property is a certain amount from a fire hydrant. Try to ask for discounts that you apply for when you're talking to those agents. And again, don't feel rushed, don't feel bullied. The only question that's dumb is the one that you don't ask. That's sort of cliche, but it's completely true. When you get this insurance policy, let's actually flip over to another picture. This is a paragraph that talks about insurance, and the insurance company knows exactly what's written into their contract. They don't want to pay out if they don't have to. I'll let you in on that secret. So make sure you know exactly what the insurance policy states. You can see that in some cases hail damage is covered, but in other cases if it's cosmetic, it's not necessarily covered. So you want to go ahead and read through the entire insurance quote, all the pages that you're given before you sign anything, before you pay any dollar to that insurance company or to that agent. Make sure you know what you're buying, what you're paying for. Go through it with a highlighter and highlight all the different areas that you're not sure of. Just like when when we talked about Dan's lesson, I'm super grateful that he was so candid and said, he just trusted his insurance agent. And that's so often what we do. So it's, again, not the most sexy topic and it's kind of boring, but really understanding what your policy includes is super crucial. Again, the insurance company knows what it's included and what it's not included. And if it's not included, they don't want to pay you. So, or if it's not the right policy, if it's a landlord policy, it should have been a homeowner's policy or a vacant policy, they might not pay out because it wasn't the correct policy or the correct name isn't where it should be. So I hope that all made sense. Again, make sure, I'll say this for like third time, 5 different companies. I would highly suggest that you do that. You might be on the phone with them for an hour or more. They might be a quick call. But again, go with someone that you like and that you trust. I hope that made sense. I hope that really helped. Now let's go ahead and jump into Erich's story.
Hey, John. Yeah, so I guess you've seen some of the photos I've sent, and basically, I woke up one morning to a phone call from the park manager bright and early, and on a Sunday morning, and I thought, why is the manager calling me so early on a Sunday? And he said, hey, your roof blew off last night in a windstorm. And I had just woken up, and I kind of was having a little bit of a slow time computing what he was saying. And so I asked for some clarification, and he said, yes, your roof is literally lying in the neighbor's yard. Oh So it was a bit of a shock to wake up to, and what had happened is there was just a giant windstorm overnight, and I guess I'm not too sure exactly what happened, but at some point the wind was strong enough, it literally ripped the metal galvanized roof right off the home, and tore it and twisted it, and tossed it into the neighbor's yard. So so pretty crazy, and certainly not something that I was expecting or would have ever expected to happen, I guess. Especially in my area, in the Pacific Northwest, we're not particularly known for, we get storms and weather off the Pacific, but we don't get these, we're not known for tornadoes or twisters or hurricanes or anything like that. So
what a terrible way to wake up. Was there any other, was was your mobile the only one to suffer anything like this in the community?
From talking to the park manager, so I was, the other part of this was I was actually out of town when this happened. Oh. So I was traveling, and so I wasn't able to run out there that day. Otherwise I would have headed out there right away. But yeah, talking to the manager and the neighbors, it sounded like for some weird reason, my home was the only one that had any significant damage from this windstorm in the park. There was, maybe a few branches that got blown down and garbage cans blown around and stuff like that. But nothing major on any of the other homes in this park. Yeah, it was pretty odd, and maybe there was just some way the wind was channeling, and whatever happened, it it hit the home pretty hard. So
Oh my gosh.
yeah.
Well, you're laughing right now. I mean, hindsight, we can laugh at things later, but how did you feel at
Yeah.
the time? I mean, what was going through your mind, and just you're away, you're not even nearby, and what was going through your mind?
Yeah. So again, I had literally just woken up 10 minutes before to this call, so my mind was probably moving a bit slower than it normally would, and so that was probably helpful. I was just trying to compute what was happening. Again, when he first said your roof blew off last night, I was kind of in a bit of disbelief, and I didn't really understand what he was saying. I was kind of trying to think, I don't have a shingle roof, it wouldn't have been some shingles that blew off, and I just didn't think that the entire, it's one of the older style. This is a 1981 home. I didn't think the entire metal roof would have literally torn right off the trusses, and so I just didn't understand what was going on, I guess. And then once he sent me some of those photos, he texted them to me, I was in a bit of shock, I guess. I just kind of couldn't believe it, and I guess just kind of, I don't think I was laughing, but at the same time, I kind of rolled my eyes a little bit and thought, well, I thought I'd seen everything, but maybe I've seen everything now. Of course, you never have seen everything, but yeah, I think I actually took it pretty well, because I just kind of thought, well, there was nothing I could have done. It just was sort of a freak accident, and you kind of have to take stuff like that in stride and only control what you can control. And I think over the years, I've gotten pretty good at just focusing on what I can do. So that helped a lot. And I thought, well, this has happened, and it's a pain in the butt, and it's unfortunate. And my main concern was it was still raining. That storm was still there, and it was, okay, what do we do next? Let's try to limit further damage to the home. There's no roof on it, so rain is just going into this home. So what can we do? So I immediately got on the phone and started making phone calls and started doing what I could do to take care of it and to limit further damage.
You do have insurance on this home?
Yes, so I did, and at the time, I wouldn't say I was calm because I had insurance. The thought went through my head that, well, will this be covered by insurance? I don't know. I've never had a claim. I've never had to go through that process, or hadn't up to this point. So I really didn't know. And so in my head, I was like, well, I hope it's covered, but I don't know. But at the time, my immediate thoughts were, what can I do right now, and to take action. So the first things I did, obviously, was talk to the park manager, find out what was going on, and then I immediately called a roofer to come out and put a tarp on the home, because that was my first concern. It was stopping further rain and water damage to the inside of the home and covering it up. So got a roofer out there on it, and then my second call was talking to the neighbor and to some of the workers that I've hired and work with to get them to come out and address some of the mess. Obviously, the roof was in the neighbor's yard. It had collapsed the fence. It was banging up against their home. There was insulation that was blowing out of the home all over the neighborhood. And this was a new park I was working in. I had just purchased the home a month before and just started a few repairs. It never worked in that park. The managers, I had a relationship with the manager. I had been, stopping by over the course of the previous year and a half. So they did know me. So I was on good terms. But then the next steps for me was obviously trying to do what I could to clean up the mess, because I wanted to do good by the park, and also talking to the neighbor. And so the neighbor was an older woman. And so she was actually the one that she heard the noise in the middle of the night during this giant windstorm, and she was afraid to go outside. She heard the roof was, I don't know if you can see in the pictures there, it was leaning up against her home, and it collapsed some of her porch and some of her gutter, and it was banging up against the side of her home. And she said, I was afraid to go outside in the middle of the night because I didn't know what I would see. So she got up in the morning when it calmed down a bit. She saw the damage, called the manager, he called me. And so I spoke with her, and I think just assuring her that I would clean it up, I would get things taken care of. That helped her a lot, and it helped a lot with the manager. It was sort of my first test in that park to show that we're a stand-up company, and we it was maybe not my fault the windstorm happened, but I did feel some sort of responsibility that it was my home causing a giant mess and damage to the neighbor's house and that sort of thing. So,
absolutely. I mean, you stepped right up as quickly as you could. Thank goodness that there was this park manager there, that the neighbor was there. If this was on your own piece of land with, trees around you and nobody would have, this could have blown right off. This could have just, the water could just be in. You'd be out until you get back from, being out of state. That's incredible. And then you step right up with the manager and handle things quickly. And I'm looking at the pictures now. I see the insulation. I mean, I can see the trusses of the home. I see the insulation. Once that roof is just ripped off there, the whole interior of the home is exposed. I mean, the insulation and then the roof and then the wire. I mean, that could have been so much worse. How was the process? How did you handle everything, or kind of can you describe the process of actually making the claim? Not so much we'll talk about, handling the next door neighbor's home, but, as far as like your home and making the claim, how did that work?
Yeah. So after taking care of the most pressing immediate things, getting the tarp on the home, the next thing I did was call the insurance company and open up a claim. So that's when my mind sort of started thinking about that. And so I called actually the insurance broker that I set the insurance up through, because I wasn't sure who to call, and that was the first number I had. He gave me the correct number to call with the insurance company, called them, opened up a claim. It was a Sunday, so they did have a department open then, but the adjuster wasn't able to follow up with me until the following day. But it went pretty smooth. There was good customer service, which I was actually quite impressed about, because you don't get that with every company these days, and sometimes you get sent to an endless automated phone system. So I was actually, pretty impressed with how it went. Opened up a claim, and then they had an online. You could go online and also like they gave you a number and some sort of claim number. I can't remember the exact details, but you open up an online account, and there you can also upload photos of the damage, any extra documents you need to. So I got on that pretty quickly because I just wanted to get it taken care of. So that day I had an online thing opened up. I was adding photos, and then the next day the adjuster called me to follow up, and they just explained the process. This happened on a Sunday. So by Friday of that week, the adjuster was on the ground looking at the home. So this giant windstorm obviously caused a lot of damage in the general area, the region. It was a big storm. So he was busy that weekend. He flew out from wherever he flew out from and was spending a couple of days going around to all these different claims. So it took almost a week for him to stop by, not quite. So I thought that was reasonable. And in the meantime, they did let us at least clean up the mess. And because I was taking measures to mitigate the damage, that's what they would have asked us to do anyways, but I was already doing it. So from there, he came out on the Friday, looked at the home. On Saturday, he got back to me and explained sort of the numbers and what the amount, the payout would be. And by Monday, that following Monday, so 8 days after it happened, they had paid it out, deposited directly into our business account.
Oh, that's the best of a bad situation. Excellent. And are you happy with the amount that was given to you?
Yeah, I think it was pretty fair. I'm not an expert on how much it would cost. I didn't have time to start getting, quotes yet because it happened so quickly. But the amount seems to me, I've only gotten one quote to replace it so far. I do need to get a few more, but it looks like it should be able to cover everything. He did say if it, for whatever reason, won't cover it, then I can contact them again, and there might be a process for asking for a bit more if you have, receipts and stuff from a contractor. But I don't know. There might be a few steps you might have to sort of prove that you couldn't get a lower bid or something like that. I don't know exactly the details, but right now it seems like it should be enough to cover everything that we need to do.
So this happened extremely recently that we're talking,
Mm-hmm.
and then so is the tarp still there?
Yeah, as of right now, the tarp is still there. I've been a little bit slow with just getting a new roof put on, but it's because I've never done something like this before. I've never had to deal with it, so I want to get several different quotes from different contractors and do it properly.
Good.
So I'm being a little bit slower instead of just diving in and saying, hey, go for it.
And the insurance company specifically told you, clean up the yard, clean up debris, but were you instructed to not make any repairs yet until the adjuster got out there, or what were any instructions there?
I can't say for sure. They actually didn't instruct me to clean everything up. I actually asked, I said, hey, can I get started on the cleanup? I don't want to leave this mess around the neighborhood for a week until they get out here. The neighbors aren't going to like that. And they said, yes, that's fine. They just said, take a lot of photos.
Oh,
so yeah, we took a lot of photos and documented it pretty well. But no, I don't remember, but I think you're not supposed to really start doing any repairs until they get out and have a look at it. But I can't remember, to be honest.
No, that's
the exact.
I mean, great turnaround time that they paid out with 8-9 days later. Do you mind if do you mind sharing what insurance company this was?
Yeah, so this was through Foremost Insurance. I think they do a lot of mobile and manufactured homes
and around the country.
Yeah, and there's a lot of insurance brokers that go through them for this type of insurance.
What was the upfront initial cost of the insurance?
Yeah, so this home, it was a 1981, kind of a smaller double wide. So my goal was just to insure it for, the what I felt it was worth. So we had it insured for $30,000, and the annual premium was $370 per year.
Oh, that's excellent. Were you able to pay that monthly, or just one time up front?
So we elected, or I elected to do, it's called a 4-pay. You pay every 3 months, every quarter, but they give you options. So if you want to pay every month, if you want to pay one lump sum, twice, two payments every 6 months, they have some flexibility. So
I like that.
I figured, the goal for the project was roughly 3 months. So I elected to do one payment for the first 3 months, and then after 3 months, but it'll add up to roughly $370 a year, and that was with a $1K deductible for $30K coverage.
So you could have probably gotten a lower deductible. Was that because this insurance, you think $1,000 deductible, you're going to fix anything below that? This was really only for major issues. This, is why you got the insurance, I would imagine. Is that correct?
Yeah, that's exactly it. You can get lower. I think you can go $500, or I'm not too sure, but you certainly can go lower than $1,000. But the goal of this insurance was always worst case scenario insurance. And I guess what I would say is that, as you mentioned, you have the option of saving $300 a year, and if you're doing multiple flips, this will certainly add up over time. And I can't say that the thought didn't cross my mind every time you start a new project. It's very tempting every time. Do we really need this? It's never happened before. We've done numerous flips, and it's never happened. So is it really necessary? And I think that's something that, at least for myself and our business, I look at, try to weigh each time I do a flip. And so far, for us, I'm a smaller business, and so the answer has always been, it would be it's worth the peace of mind. And if a worst case scenario happened, we're still small enough that it would really be a major blow.
Oh, that's
so
true.
I think each person kind of has to look at that, look at the size of your business. And I mean, like you said, what's the worst that could happen? Well, I laughed at that because I never would have thought this would have happened, but every now and then strange things do happen. So you have to kind of ask yourself, hey, if we had an electrical fire, or, if something happened, the odds are extremely low, but I guess this is proof it's not impossible. And I guess that kind of segues a little bit to the neighbor. So it did cause some damage to the neighbor's property. Not a lot, so we were lucky there, but it did, damage their gutters, their porch, their fence, made a mess. So I just had, when I had my workers over there cleaning it up, we had them clean up the neighbor's yard first. I instructed them. And then, one of our workers was a carpenter, so he fixed the fence as well as their porch. It was pretty minor, but we had to get She also had homeowners insurance, and when I talked to my insurance, they said they don't cover damage to the neighbor's property. That the neighbor has to file their own claim, and so she had a $500 deductible, and the main damage was to her gutters, and we got a quote. It was like 490 something or 450. So her insurance wouldn't have covered it. She would have had to come out of pocket for that damage. And what I decided to do was I just made a call, and I said, you know what, any damage you have up to that 500, if it's more than that, your insurance will cover it, and we will pay up to that $500, because even though we weren't responsible, obviously, for the windstorm, I felt partially responsible that it was our home causing the damage, and I just thought it was the right thing to do. Absolutely. And she really appreciated that. The park manager saw that. I think it went a real long ways.
Good for her for having insurance. Does this park require insurance?
The park does not require insurance, no. So it was just partly luck that we both had insurance.
All right, I had to come back just one more time to say thank you so much to Erich for hopping on that phone call and talking with me, sharing his experience, sharing what happened, what his thoughts were, those pictures that we were able to include. Now we're going to talk to a couple of my favorite insurance agents. I'm going to ask them some sort of questions and then cut in different snippets of just things I thought that were really interesting, cool facts that I had learned, and just sort of conversations that you're going to, you know, if you've never talked to an insurance agent, this may be helpful to you in some ways that I hope. So we're going to talk about that. Thank you so much for watching. If you made it this far, then you're awesome. You know, clearly you do want to better yourself for the long term. In this mobile home investing, or, you know, owning properties, it's a huge responsibility. We're changing people's lives. We're helping people. We want to have a long-term business. Insurance plays a big part of that. I'm rambling now, so let's jump into that last audio section, and then have a great day. I'll talk to you soon. Bye-bye.
What's to stop somebody from getting 5 policies, you know, with 5 different companies, and
there's nothing to stop them. Hold on, I can stop you right now. It's a very easy answer. There's nothing in the world to stop them. But one thing about it, all insurance companies, when you make a claim or report it to one central unit, right? So say, for instance, if you're insured by 5 different companies on the same home and you have a loss of $100,000, each company is only responsible for $20,000. They'll just split it up 5 ways. And if you do collect on all of them, once they figure it out, you end up in jail. They'll sue you for fraud.
As you should.
Oh yeah, but you're definitely going to jail. But they wouldn't, before they cut you a check, trust me, they'd go through the dotting their I's, crossing the T's. And the name of the company they use, I'm trying to think of it, Choice Point. Choice Point is a company where all claims are reported to throughout the United States, you know, for homeowners, auto, all that good stuff. Tells on the property that was lost, the amount that was paid out. It'll never let you know if fault or not, but it'll always give a description of the loss, the amount paid, and this, that, and the other.
Is that available to the public?
No, you got to pay for that. Okay. No. And that's I don't even know if you can pay for it. That's an insurance industry. I don't think they'll divulge information like that to show public. So, you know, that'll be the guy sitting behind the office, you know, trying to conjure up the new fraud. So I doubt if they can get to it. But yeah.
What if something were to, like an awning, blow off of my home and then hits the neighbor's home or something like that? Would that be covered?
Your insurance wouldn't cover it. I mean, if that was like an act of God, the wind made that happen. Most likely, if they had insurance, their insurance would have to cover it. If they wanted to sue you and hold you liable, say that it was your fault that happened, they have the opportunity to do that. It doesn't necessarily mean that your insurance is going to cover it. If there was an issue with your awning and you knew about it and you didn't repair it and they had told you, oh, that thing looks like it's going to come off, and then sure enough, the wind blew just right and it blew it off and it hit their house, their car, they could sue you, and that's when your liability insurance would take over in that sense. But you're insuring your house, your property. You know, so your insurance would cover if the awning blew off of your house and it was an insured loss that made it happen. That's what liability is for. I mean, anybody can sue anybody for anything. Does it mean that they're going to get it? Probably not. They can try, but just because the wind blew, you know, you can't be held responsible for that unless you knew that there was something wrong with that awning or that tree and you didn't do anything to ever repair it.
I've heard the term insurance agent and insurance broker. Is there a difference?
Yes and no. I mean, an agent can sell for different companies. He just doesn't have binding authority for different companies. A broker normally has binding authorities, and sometimes they may even charge a fee. And in this case, sometimes we charge a fee, and sometimes we don't, depending on the business that we're writing.
What does that binding authority mean?
Binding authority means basically, say if I have a deal that you like and you want to buy it from me, and you'll be like, okay, can you make it effective immediately? I'll be like, it needs to take me about 24 to 48 hours. I have to take your money, call the company, and get them to bind it. But see, I have exact binding authority, so right now I can write it, I can make it effective right this second immediately.
Okay.
Yeah, just semantics and insurance, but to the consumer it means nothing. It's just on the back end.
If I have a brand new manufactured home, would there be more options?
There absolutely would be. With the newer home, there's a lot more options. You could get more coverage, many more things with it. When it's older, it's kind of limited, because the codes with those change so much. Think of like anything 2002 and up, it's easier for us to insure.
Is that because it's so many years behind, or did something happen in 2002?
2002, they changed the coding, so how they tie it down, the roof codes, and all of those things changed.
Okay.
Some states, if it's not in a park, we can't write it. Or if it's not in a park, or if it doesn't have a mortgage on it, we can't write it. And the reason being, you'll find in a lot of these states, homes like this sitting on private land, mysteriously gets burnt up.
Wow.
And there's nobody or no cameras out there to tell who or what did it. So, yeah, that's the reason for those questions. Certain states, if you're not inside of a mobile home park, we cannot even fool with you, Florida being the main culprit.
Wow. So you mean it's even easier to get insurance inside of the park than it is outside?
Yeah, the reason why, because there's always somebody there. You know what I'm saying? But out there on your own private land, in a lot of places, you're out there by yourself, and there's nobody around, and then these homes mysteriously just burn up.
That's not funny. I'm sorry. That's not funny.
Yeah, but it is. I mean, it's called life, man. And just the reality of it all. I mean, next time you're out driving around and you see a mobile home on a vacant land and it's burnt up, you're going to think about me.
You got that right. I appreciate your help.
Oh, not a problem. I'm sure they're paying me for this, and the day is going by smooth for me.